With me now on the line is Capital Network's Ed Stacey. Ed, good morning.
Good morning.
For Ed's full report, click on the eye in the top right-hand corner of the screen. We're talking Empresaria Ed, the international specialist staffing group here. A trading update out from them this week. Quite a significant pullback in the share price we've seen. What's your take on what's happening?
Yes, I mean, to remind you the background first, Empresaria shares had been a sort of standout performer amongst the staffing agencies in the last 4 years, and that carried on into the first half of 2017. And the reason is Empresaria is geographically diverse, it's a multi-niche business. Within each of their niches, they have a high market share, and we're talking niches of high-skilled, highly specialised categories of employment. So compare it to the average UK generalist temping agency, Empresaria has been performing better, because it's just a better type of business in our view. Now, on the 21st, we had this trading update, and as of now, the shares are 40% off the highs from just a few months ago. So investors are obviously asking themselves, has this wonderful growth story just ground to a halt? Is that what the trading update is telling us? That seems to be what the share price reaction says.
Well, this trading update itself, Ed, what was in it?
Okay, there are two issues. Firstly, the Middle East market has been slower. That was flagged in the first half results, and that's continued. Secondly, in Germany, there are some regulatory changes, which we already know about. They're aimed against employers using temps as cheap labour. So it's not really what Empresaria does in the more high-skilled segment, but it still creates friction during the actual implementation of the regulations. Full implementation is in 2018, but the surprise has been we've seen companies acting a bit early, and so we've seen some changes in customer behaviour already this year. The bottom line is they're now looking at just single-digit earnings growth in 2017, so slower than previously expected, and looks likely it's low single digits again in 2018. So that's what the trading updates told us.
And what more can you tell us about how the share price has reacted?
Yeah, I think the first thing is to look at the valuation. We're now on less than 8.5 times PE. This is a company that's delivered 18% EPS growth annually through to 2017. It's still expected to be positive EPS growth in 2017 and 18, just not as strong. And it's a company with a strong cash flow, strong balance sheet. So on less than 8.5 times PE, I do think what the valuation is implying is that there's no more growth from here. Now, from our perspective, I would say the German regulations, they're fully done and dusted as of 2018. And actually thereafter, I think it benefits Empresaria that you have a robust framework for quality job creation in the high-skilled contractor sector. So I don't think Germany is dead in the water for them at all. I think it will carry on growing after 2018. And meanwhile, remember, it's a globally diverse business. They've got Asia, they've got the UK, they've got North America. So no, I don't think it's an end to the growth story. And, we've sort of been here before with regulations causing a share price pullback a couple of years ago. We can't see that this is an end to the growth story. So I think, as with the previous share price dips that you've had in the last 5 years, I think this is a good time to take a good hard look at Empresaria, because you've got a cheap valuation now for what is still, I think, a very high-quality play in the sector.
A good time to take a look at Empresaria. For Ed's full report, click on the eye in the top right-hand corner of your screen. Ed, thanks very much.
Thank you.